All right. So just yesterday, we seemed to get a renewed confidence in the AI trade. So many of those names moving higher this morning after CoreWeave earnings and this news that SoftBank is selling out of its NVIDIA share. A lot of questions, it seems, when it comes to investors. A lot of the names that moved higher yesterday moving lower now. This volatility when it comes to the AI trade, do you think it's sustainable?
Well, I think that given the valuations, given the kind of numbers that we're looking at with regards to AI capex spend, I think it's right that there's going to be some question marks, some ongoing skepticism. But I think when we're taking a step back and trying to evaluate is it in a bubble or not, the valuations today are significantly less elevated than what we saw during the dot-com bubble. There are concerns, of course. We have to look at what's happening with leverage finance, and of course circularity. So it may be that a bubble is growing, but at least at the moment, when we're looking at the fundamentals of balance sheets, we are quite reassured that I think the tech narrative can continue. Of course, there will be some air pockets along the way.
All right, you brought up leverage finance, and we're going to talk about this a bit later in the show, but is that a concern for you, the fact that companies that have so much cash, but obviously need even more cash, are turning to the debt market?
It's quite small at the moment. So if we were, for example, to look at the Mag 7 and then you compare it to the rest of the S&P 500, the debt financing for those 7 companies is significantly less. But of course, it is something that we need to keep an eye on to make sure that it doesn't become an upward trend that then does raise the stakes in terms of what the AI bubble or AI potential bubble could do to the rest of the market. So it's something to worth watching. We don't think it's a clear issue at the moment, though.
All right. It seems like the U.S. government shutdown could be on the way to ending. Obviously, the bill has to go to the House, has to be signed by the president. So there's a few more steps. But we heard some encouraging signs from the president that he's in support of the bill, excuse me, that's been put forward. With that in mind, what area of the markets do you see performing better with the idea the government here in the U.S. at least is back open?
Well, I think one of the key things that we've seen over the last couple of weeks is not necessarily worries about what the shutdown is actually doing to the economy, but it's been about the lack of economic data. And so the fact that the Federal Reserve and investors have found it very difficult to find their way to try and figure out what the path ahead is. So I think with the release of economic data, we do think it's going to put the December cut from the Fed back on the table. And that really paves the way for a further rally in risk assets. And really, this is about being the risk on trade, being overweight equities, being overweight US equities, continuing to look at those big tech, of course, but for some of the more cyclical areas which would really benefit from the Fed stepping in with an insurance cut. So it is a risk on trade, keeping in mind that given there are still some concerns around the macro outlook into 2026, to have a couple of hedges, that being some of the higher quality space within fixed income, for example, or certainly within real assets, for example, infrastructure, where you do get that stable income stream.
You know, Seema, fair enough to say that you're very overweight the United States, but what areas? Obviously, the United States market is very diverse. Some people are seeing a lot of opportunities in small caps. Tech, obviously, continues to be something that goes up and down, big upside moves, and recently big downside moves. Is there one sector in particular you see as a beneficiary?
Well, of course, we continue to like technology, but, you know, as we've been just talking, that there are some risks around that. I think financial spaces continue to deliver, and as long as the US economy is okay, continues to perform well as we're expecting, then financials do well. They're also not that exposed to the tech trade, so you do have a little bit of diversification. And you did mention small caps, because that's been a really interesting part of the market. They do need a continuation of Fed cuts, and they do need a continuation of positive economic growth. If that does come through, then we think that given the valuation gap against the large cap side, we do think that small caps could perform really, really well. But I think the jury is a little bit still out there for now.